Well, first off, thanks to Habitat, the Dallas Area Habitat for Humanity, for having me join you guys virtually. Usually this event happens in person, so we are obviously doing a virtual version this year. So thanks for everybody hopping on your phone or your computer or wherever you're at to check some of the stuff out that's going on today. Just a quick supplement to what Elizabeth mentioned. What I do for State Farm is I'm a financial coach, so I meet with people one-on-one to talk about all these various topics, as well as put together and present these financial materials. So it's a financial education kind of wing of State Farm, so to speak. That being said, I am going to have a handful of questions for you to fill out, just some quick yes or no's or polls throughout. As well as, like Elizabeth mentioned, I'll pause for questions about halfway through, and then I'll definitely leave some time at the end for just kind of open Q&A, so we'll make sure that we definitely have time to answer any questions you may have. So let's go ahead and dive in. So today, we're going to mainly focus on budget and credit and part of the home buying considerations. So this is going to be a high-level overview of some of those foundational financial topics that are going to apply to everybody when it comes to purchasing a home. So let's go ahead and dive right in what we're going to talk about. So first, we're going to talk about readiness. Where are you at along the process of purchasing a home? How much can you afford when it comes to purchasing a home? We're going to talk about the budget breakdown, because obviously buying a home and your monthly budget are going to go hand in hand, especially if your housing costs will be adjusting one way or another after purchasing a home. We want to make sure that we're good to go there. And then another big piece, like I mentioned, is credit, because the credit factors how your credit score is calculated and things to consider when your financial responsibility and how that affects your credit score. And then we'll wrap up with some next steps and things that you guys can take away. And then, of course, like I said, we'll have some room at the end for questions. So, readiness check. Step one. These are just a few things for you to think through, whether you want to take notes on a Word doc or a OneNote on your computer, take notes on pen and paper. I do encourage you to think through some of these questions, and that can help you decide on where you're at as far as a readiness check for buying a home. So that first bullet there, do you plan on staying put for a while? So most financial experts would agree that
La mayoría de los
when you're purchasing a home,
expertos,
you want
cuando
to try
compras
to
una
plan
casa,
on being there for 5 years is a good rule of thumb.
por ejemplo, tienes que pensar
If you're there for 5 years, it gives you a chance to hopefully build some
así que la
equity
mayoría de los
in the
expertos
home, meaning that the home will
estarán de
increase in
acuerdo.
value, while also paying down some of the money that
Por
you owe
ejemplo,
on the
tienes que
home.
pensar en el valor.
So after 5 years, roughly 5 years, ideally, you will then, when you go to sell it, make some money on it.
Y también pensar en el valor que va a tener en unos 5 años en el caso de que quieras venderlo.
Your employment situation is the next thing to consider. And this is just simply thinking through job security, essentially.
La situación
you feel good about where you're working. Obviously, right now, times are a little crazy.
Por ejemplo, ahora que son los momentos en los que estamos
do you feel good in your job security?
Tienes que pensar si estás seguro en tu trabajo.
You typically receive annual raises.
Si vas
all
a
of these things are
conservar ese trabajo
to consider.
Y muchas cosas que tienes que considerar.
The last one here is your credit score, and we'll dive into this deeper when we get into the credit section. But essentially, your credit score is a number that is almost
límite de crédito al que puedes acceder
when it comes to financial responsibility. So I'm going to pause it right there for my first question for everybody on the call. And it's a simple poll, yes or no. Right now, do you know what your credit score is? And that'll pop up here in a second. Just click on the screen,
¿Cuál es
yes or no.
tu límite de crédito al que puedes acceder?
And I'm not sure if you guys can see it or if it's popped up, the credit question. Oh, there we go. So yeah, just go ahead and click there. Do you already know what your credit score is as of right
Aquí
now?
os presentamos alguna pregunta para que podáis contestar. ¿Sabes cuál es tu límite de crédito?
And we'll give you about
Okay.
10, 15 seconds, or if we already got
Vamos a
below
dejarnos
We're
unos 15
going to
segundos para
ask
que
the
contestéis.
translator to mute momentarily. And John, you have about 72% of individuals who've said yes, 28% no.
Awesome, thank you. Cool, so like I said, this is like a readiness check. These are important questions, these 3 questions to take into consideration and think about
Es una
before
pregunta
taking
importante
steps to purchase
antes
property. So let's
de
move
pasar
on
al
to
siguiente
step
paso para
2.
comprar una propiedad.
How much of a house can I afford?
También otra pregunta es,
You're
¿cuánto
going to
puedo
go to the
aportar
bank
para comprar esa
and get
casa?
pre-approved for a mortgage. And based off of your income, or you and your partner's income, if you're both
Tienes
getting
que comprobar
pre-approved
los
together,
ingresos que tienes
your credit score, how much debt you currently have,
y
all
también
of
el
these
límite de
factors
crédito, cuánto
go
crédito
into whether or
piensas
not,
pedir.
not whether or not, but how much money the bank is willing to let you
Y
borrow.
cuánto dinero el banco
The big thing to
está
consider is
dispuesto a
that
prestarte.
how much money they're going to let you borrow doesn't take into
¿Cuánto
account
dinero vas a tener que
other factors in your monthly budget or your lifestyle. So for instance, they may say you can borrow $300,000,
por el momento, si
$200,000,
quieres
or
solicitar al
$500,000
banco
for a
$300,000
home,
para una
but they
casa?
don't know if you plan on going on vacation often, or if you go out to eat a lot, or things that your lifestyle considerations
Por
aren't
ejemplo,
taken
tienes que
into
tener en
account.
cuenta
And really, I
tu
only
estilo de
point
vida.
this out because when we get into the budget piece, that's where it's really important to
Una de las
say,
cosas que
okay,
tienes que
what
tener en
is
cuenta en tu
comfortable for you? What's a number
presupuesto,
that's comfortable to pay every month
qué
when it comes to the
cantidad
mortgage, the
es la más
property
adecuada
tax,
para ti,
the homeowner's
cuánto te
insurance,
sientes
all of
cómodo
these things that go
pagando cada
into
mes,
your monthly budget
dependiendo de
that
tu
may be
salario
slightly different
y tu
owning a
estilo de vida.
home versus renting a home or an apartment.
John, I'm going to ask you to stop for a moment. Can we ask the translator to please mute?
And basically, I went that last bullet I just kind of covered. The big thing here is we want to make sure that you are comfortable month to month, and you're not what we consider house poor, meaning that all of your money every month that you make is basically going to just pay the mortgage, and you're trying to figure out, well, how the heck am I going to eat, right? We want to make sure that you are comfortable in that new home. So let's talk about how we figure out that last bullet, right? So step 3, the budget breakdown. So there's a lot of stuff on the screen here. So we'll go piece by piece, and we'll actually just follow the red little oval circle there. First, we're going to start with money for your goals. So this is essentially the amount of money you have left over at the end of the month to allocate towards goals. Basically, all of your income subtracted by all of your expenses, and that's where we figure out what we have for goals. Now, this class, we're not going to specifically get into a lot of goal stuff because we already know one of our big ones is we'd like to purchase a home. So moving on to the left side of the screen, we're going to take a look at our income. So when considering purchasing a home, your income is going to be your actual take-home pay. So you may make $15 an hour. You may make $10 an hour, $20 an hour, $100,000 a year, whatever it looks like on paper. We're actually going to consider what, after taxes, and if you're fortunate enough to have health insurance through work, things like that, what actually hits your checking account. The next piece here, the next type is we're going to get into some of these expenses. So for fixed expenses, these are going to be monthly bills.
El siguiente paso es comprobar los gastos fijos.
So these are going to be, right now, your housing cost, rent, that's something that most people are going to have, if not everybody on
Y
the
esto lo
call.
vas a tener que calcular con los gastos que has tenido
Minimum
los
debt
meses
payments is a big
anteriores.
piece here. So pro tip, don't forget about including minimum debt payments.
Las
So if you
facturas
have
que
credit card
tienes
debt, student loan,
normalmente,
car payment,
de los
things like
gastos, si
that.
tienes un pago de un alquiler, electricidad,
The other way to think about with the fixed is
y también
honestly
algunos
anything that is
créditos
your fixed
que tengas
cost.
que
So it's
ir
a gym
pagando.
membership. It could be your subscription services. If it doesn't change month to month, it's a fixed cost. Now, of course, you can always adjust these things as far as whether you have them or not. I also consider fixed costs almost like binary expenses. You have it or you don't.
Tienes que tener en cuenta
The gym
todos estos
membership
gastos
costs $50 a
que
month, or it's
tienes
just
al mes.
because the next type, this is where
El
more of those
siguiente
lifestyle type
elemento que hay
things
que tener en cuenta en
the
función del estilo de
behavioral
vida
type expenses, those
son los
everyday.
gastos variables.
So this is groceries, this is going out to eat, this is shopping, this is ordering stuff online.
Por ejemplo, comprar,
entertainment,
salir a cenar,
anything
son
that
los gastos
happens month to month,
variables
but it's basically kind of, it varies. That's what we put in
que
here.
van a variar
Pro tip
mes a
here,
mes.
if you're going to take anything away from this
Y
class,
más o menos tienes que
especially this budget
calcular,
piece, that pro tip.
hacer una media en los últimos meses
Average the
para
last 2 to
comprobar
3 months
estos
of your
gastos
expenses
variables.
to get a good baseline for where your money's been going.
Y de esta forma
So in
podrás
order for
tener
us to make
una
an
idea,
educated
un
decision
promedio
on if we want to make any
de tus
adjustment
gastos.
to our expenses or where we've been spending our money, we truly need to see where it's been going. So that's the best thing you can do. So 3-month average.
Así que esta es la mejor forma, calcular, por ejemplo, en los últimos 2 o 3 meses
going out to eat.
Los gastos variables que has tenido.
And so, quick side note with the whole pandemic, I have noticed when I meet with
one quick moment, may I ask you to pause briefly?
Yeah.
Can we have the translator please pause and mute, please, while John speaks? Thank you. Go ahead.
With the last 3 months, most of us being inside most of the time, we have noticed with our one-on-one coaching sessions that people's spending habits have tended to change a little bit. As you would imagine, ordering more things online, not going out to eat as much, and it's a really interesting thing for you to check out to see if that stuff has changed for you. So maybe even look at the past 3 months since the pandemic, and then maybe look at 3 quote unquote normal months, maybe before that happened. And the last type of expense here is your non-monthly expenses. So these are expenses that you will have, but they just don't happen every single month. So they're things that we can plan ahead for because we know they're going to happen, but they might be slightly bigger than a normal monthly expense that you would want to kind of incur each month, or not each month, but the month that happens. So examples here would be like, if you need to buy plane tickets later in the year for a holiday to see family, or planning ahead for maybe a vacation, or if you have a wedding that you need to go to. The idea being, let's say I have a wedding this fall, and it's 3 months away, and I want $300 for it. So the equation there at the bottom is that pro tip. So $300 for the expense, that's what I want. It's 3 months away, so divided by the 3 months, that leaves us, $100 a month is how much you would technically want to set aside each month. So when you do have to incur that expense, it doesn't necessarily throw your regular month-to-month budget out of whack because you did proactively set money aside for it. So where do we start with all of this? Well, the first step is actually to write out your budget. Now, obviously, we won't take time for everybody to write everything out, but in a follow-up email, we will get you a link to our budget worksheet, which essentially is the framework for everything we just went over. So all the different types of expenses you can see the different pieces we talked about. So we talked about your income, we talked about your fixed expenses, and one of the things I mentioned there on the fixed expenses was don't forget about minimum debt payments. So if you do have credit card debt, if you do have student loans, if you do have a car loan or a personal loan, old medical bills, anything that might be considered debt, make sure that we are including it, because that's going to be a big piece of factored into how much you can afford when it comes to comfortably paying for a home that you own. So I'm going to pause there for our next poll question. And so this one, we're simply going to ask you, how stressed out are you currently about your debt situation? On a scale from 1 to 5, obviously, if you don't have any debt, you're probably not too stressed out. If you do have debt, maybe you are, somewhere in the middle, or maybe you're really stressed out about debt. So just to get a pulse check of everybody on the call, we'll throw that poll up here in a second for how stressed out are you about your current debt situation.
Hold on, we're getting the next poll ready for you.
No worries. Is this the debt stress question?
Yes.
Okay, cool. Well, and while we're getting that pulled up, I can continue to see or to move on here with this. So one of the other things I wanted to point out is these 3 blue boxes are essentially, for the most part, not going to waver too much. Now, you may have fluctuating income, and that's a whole nother topic that we can get into. But that's going to be, at the end of the day, the ones in the boxes here are more or less fixed. And I do see the emergency fund question popped up. So real quick, let's go ahead and answer that one. Do you currently have an emergency fund? And an emergency fund, here's what we would consider an emergency fund if you're not sure. Anywhere from 3 to 9 months of essential living expenses set aside in savings. Now, that being said, this is anonymous, the way you answer it, and if you do not have one, you're certainly not alone. In fact, I'd say most people I talk to don't. But I'm going to go over the importance of the emergency fund. And just like what it sounds like, it's for emergencies. So that 3 to 9 months of essential living expenses, we do want to make sure it's not invested and it is in cash. And essentially, there's kind of 4 things that you would ever dip into for the emergency fund. Unexpected.
We have about 47% who said yes and 53% who said no.
Gotcha. And so the 4 things you would ever really dip into the emergency fund for are, well, one is unexpected home repair if you are a homeowner. So that might not apply to you right now if you are renting. Unexpected car repair. So if you have a car, and I'm not referring to like, getting your license plate sticker or an oil change. This is like my transmission broke and I need my car to get to work. And then the other 2, so home and car, unexpected breakdowns, repairs. And the other 2 that apply to everybody, unexpected job loss or medical expenses. So those are the 4 things that can really come out of nowhere and really hurt you if we don't have that emergency fund set aside. Now, if you don't, three months of living expenses sounds like a lot, and it is. I wouldn't try to get too stressed out about that final end number. The idea is that just hopefully we are trying to build up some cash month to month to get to a place where we do feel comfortable with that. So the last step here is the credit factors. And I mentioned we would dip into these in a little bit more detail. So your credit score is essentially, I like to call it it's your measurement of financial responsibility. And it's almost like your adult grade point average. So it's a number. It goes from 300 to 850. The higher, the better. And in most cases, generally speaking, anything over 700 is going to suggest a good credit score. You manage your credit well and manage your money well. And there are 5 factors that go into that credit score. So the first one, and you can see how much they're weighted, and it won't, hopefully not blow anybody's mind here about how it's broken down. So it does make sense. So 35% of what goes into your credit score, and building that credit score is simply paying your bills on time. Do you pay your bills on time? And I would like to point out that if you're a couple days late, that's not the end of the world. You have to be a full 30 days behind before a bill is considered late. The next piece is your credit utilization ratio. So this is just a fancy way of saying how much of your available credit are you currently using? Now, this is specific to credit cards, and they do look at all of your credit cards together. So whether you have one credit card or 10 credit cards, let's say you have $2,000 in credit card debt, but your available credit across a few cards is actually $10,000. So you're using $2,000 of 10,000 available. You're essentially using 20% of what credit is available to you. Ideally, you keep that percentage below 30. So it's 30% of your score, and you want to keep it below 30%. The next three in gray aren't worth as much because we don't have as much direct control over them. So 65%, almost 2/3, is basically in your control of paying your bills on time and try not to be too maxed out on your credit limits. 15% is your length of credit history. And this is just simply the longer the better. And if you have a credit card currently, this is where we would talk about whatever your oldest credit card is, you would technically never want to close that card because that is your oldest piece of credit history. So that's just something to consider. If you're thinking about getting a new credit card at some point, you probably want to try to keep that oldest one open. Credit mix. So this is where there are a couple different types of credit. Your credit card, which is what we call revolving credit, because it technically never closes, right? You can put $100 on a credit card, you can pay it off, and that $100 is immediately available to use again. And it never ends unless you actually close it. Installment credit, that's where, just like the name precludes, you have a certain number of installments, and then the debt is paid off. So these are things like car loans, a student loan, and also a home mortgage, right? If you get a 30-year fixed mortgage, after 30 years, those installments are done being paid and the loan is gone. And the reason why it's called credit mix is because financial institutions would like to see that you have both types of credit because they like to see that you're able to manage both types of credit. And then credit inquiries, if you've ever heard of someone take a look like a hard hit or a soft hit on your credit, that's what we're talking about here. So when you go to the bank and get pre-approved, it actually does a small ding on your credit report and on your credit score. So one way to think about this, and this is generally a general statement, if you want something like opening up a new credit card, opening up a car loan, a home loan, it's probably going to count as one of those quote unquote hard hits where it does do a little bit of a ding on your credit score. Those are only on your credit report for 2 years, and they don't actually affect your score anymore after 12 months. So ideally, we don't have a lot of these hard inquiries on your report, but again, the overall piece of the pie, it's only worth 10%. And one really cool thing about going out and home shopping, so if you're gonna go to a bank and try to get pre-approved for a mortgage, once you do that, it does count as a hard hit, but it also opens up a 2-week window where you can go get pre-approved at as many banks as you'd like in those 2 weeks, and it will only count as one hard hit. And the reason why you might want to do that is because each bank is going to have their own rules as far as your credit score, your income, and things like that. So you may get a better interest rate, pre-approved for a better interest rate or a different amount of money at various different banks. So you do have a 2-week window to kind of check out as many as you can. So with that, I'm going to wrap up here with some next steps, and we have about 5 minutes for questions. So things to consider, and we've already talked about, are you ready to begin this journey? And hopefully based off of what I've spoken about today, if you weren't sure, hopefully you've got a little bit of a better idea. How does your credit look now? What is your employment status? Does it feel good? Making sure you can check your budget to see how much you can afford. I would add, maybe you even leave off your housing costs now. Look at your budget and leave that rent line blank, because that'll give you a good idea of really what's left at the end of the month that would be able to be allocated towards a housing cost. Check your budget, kind of just what I said. Do your homework and begin searching for your home. You know, what do you need to have? What would be nice to have? What would be in your dreams as far as what's part of your home? Obviously, be patient. The process may have some hiccups, and hopefully you guys have signed up for other breakout sessions today that you can learn more about the home ownership process. Now, we've got a lot of realtors and various different angles to come at the process of purchasing a home. And last, but certainly not least, enjoy your new home. It's going to be a great experience. And with that, I want to thank everybody. And I guess we do have about 3 minutes or so. So we'll get as many questions as we can done here. And I think Matthew was going to relay them from the chat to me.
Yes, sir. All right. We have one from Brandy. Does your credit report need to be squeaky clean to purchase a home? I have quite a few medical bills on my credit, as well as other collections that I am paying off now.
Yeah, thanks for the question, Brandy, and a great question, and probably applies to a lot of everybody else on the call here too. So your credit report does not need to be squeaky clean, and especially if you are in a situation, like you mentioned, Brandy, with old medical bills or things that might be in collections. First and foremost, it's the fact that you're paying them off, or you're on like a payment plan to get those paid off. That certainly looks a lot better than if you are not doing that. So kudos to you, and that's great. And kind of circling back to my other point of a lot of times it depends. You know, if you go to Bank ABC, Bank XYZ, Bank 123, and Bank 456, they are all going to have their own internal underwriting rules for what they accept and don't accept, or how much money that equates to, which is where you can really take advantage of that 2-week window of talking to a handful of different banks, because it is going to ultimately be up to them.
All right. We have another one from Melanie. How does refinancing or doing a loan modification affect the credit score? Does doing so ding the credit score?
So if you currently own a home and you want to do a refinancing your home or modifying the current loan, it would be considered a hard hit. But at the end of the day, that is the hard hit should not be the thing that discourages you to refinance your home if it's going to make a lot more sense to either lower your payment or get better interest rates on your loan. Because again, those dings, those hits on your credit only matter for 12 months, and it's very minimal, especially with the benefits that would be outweighed more than likely by refinancing. So yeah, short answer is I wouldn't let that stop you from doing something that makes sense financially for you.
Okay, and we have another one from C. Gravis. How do student loans look on your credit when purchasing a home when you have them in deferments?
Student loans are going to show up just like any other loan. Going to be in installment, and if it's currently in deferment, it will show up as that on your credit report. So your credit report is literally just a snapshot in time. So if you pull it today, it may look different than if you pull it 30 days from now. And the amount of student loan debt you have isn't as important as how much are you required to pay each month. So you may have a different type of repayment plan on your student loans, because what the bank cares about is not the total student loan debt, but how much of your monthly income is required to go towards student loans.
Don, I think we're just about out of time, but if you want to take one quick question, I do want to remind everyone that there are additional sessions happening today. If you want to join, I did drop the link in the chat for the full schedule. You'll do the regroup and raffle session right after this. But if you want to take another quick question, we maybe have another minute or two.
Yeah, we'll take the last question here.
Okay.
I have one from Anna. I had a bankruptcy back from 2011 that closed. How does that impact the process?
So bankruptcies stay on your credit report for 10 years. And it's Again, and I hate this being like kind of the non-answer. It is going to depend on what bank and how much weight they put on a bankruptcy. But the nice thing, if it closed in 2011, I will say, the farther back in history it is, and especially if since 2011, your credit report looks pretty good, you've been paying bills on time, that sort of thing. Honestly, it's probably negligible at this point, especially considering within the next year, it'll have been 10 years and won't be on your report anymore. So for your specific situation, I would say if you're still working on saving up for a down payment, and you don't think it might make sense to wait just the next 12 months or whatever it takes for that bankruptcy to fall off, because after 10 years, it won't show up on your report anymore. But at the same time, if you're chomping at the bit and ready to buy a house right now, the fact that it's literally about to fall off your report, and especially if your history since then has been good, I can't imagine many financial institutions putting too much weight on that.
I want to thank our presenter and thank you all for joining us today. Have a great afternoon, and we look forward to any additional questions you may have. Feel free to reach out to the Dallas Habitat for additional information. Thank you, John.
Yes, thanks for having me. Thanks. Have a great day, everybody, and enjoy those other sessions.